Guys, today I have something absolutely crazy for you. Central banks accumulating Bitcoin. So this sounds like fantasy and fiction, but hear me out and watch this video from the beginning and until the end. This is going to be the juiciest part of the video. But first, we also need to talk about very important stuff that is happening right now as well. So let's just, without any further ado, let's just jump right into this. And the first things first is going to be the oil price. And the oil price is steadily going down. Look at about $73 a barrel. So we are pretty much going down right here, lower than actual local lows. So this is very good. This is going to have a profound effect on inflation, etc. So this is very nice. Now, when it comes to Dixie, let's get this obvious stuff out of the way. We still are seeing very huge weakness in Dixie. Right now, our main target that we want to break is 103. So really waiting for this to happen. When it comes to the traditional markets, we are in this wedge as of right now, and it seems like it's gonna try to break down, and hopefully that's not gonna take us much lower, because this is something that is happening in Bitcoin. But the Bitcoin price, we're gonna take a look at also my trade and everything I'm doing in Bitcoin right now. I'm gonna tell you all about at the end of the video, so that it will put everything in perspective, so to speak. But for the traditional markets, we saw this mega important resistance that came in, this yellow one right here, which was very important for us, and unfortunately, look, it actually turned us spot on. So for now, all we can hope for is that we gotta get supported here and then actually go up and break it. But as of right now, this is the last line of defense for us at this point. If it breaks down, then hello, it's gonna go into trend, so to speak, which would actually make sense, to be honest, at this point with the current macro environment. So now let's move on to very important news and then get into the topic of central banks accumulating Bitcoin, which is crazy. But this is just huge. Right now, guys, is a time in history that is gonna go down in history books. So you really want to pay attention to what is happening in the world right now. And certainly, if you're brand new to the channel, hit that subscribe button, hit that like button, hit that notification bell so you're always notified when I make a new upload. And also call me Mr. Spot On down in the comments right now for the algorithms. And also, if you feel like doing so, would be very much appreciated by me and the whole community if you could share this video on your social media. There is a share button down below here on YouTube. So, very important catalyst for a short-term perspective for the price. I think it's going to be bringing a lot of volatility tomorrow at 8:30 a.m. Eastern time, and that's going to be the release of the jobless claims. So the forecast currently is 230,000. If it's going to be more, it's going to be quite bullish, because Fed is going to see that, unemployment is going up. So if it's going to be less than 230, then that's going to be quite bearish, to be honest. But for the time being, we really want to see it actually higher. This is really what I personally want to see. Now, and also certainly, if we're going to be taking any new trades, then, well, maybe we'll trade also the release of the data on US initial jobless claims. So all of those trades are going to be posted in my free Discord channel. There is a link down in the description of this video, as well as in the pinned comment, which you can click and join my free Discord channel, which is absolutely free, and we're doing much better than most hedge funds this year. We're actually making money. All the trades, all the explanations, the whole community with like almost 20,000 traders, it's absolutely free. So join us right now. We're making very good money, and in general, our community is making very good money. Look, 12%, 92%, 100%. Not every trade is a profit, but overall we're making good money. So this is amazing. 35%, etc. So if you want to make some money, see how professionals trade and communicate with like-minded traders, then use the link down below and join us right now. The next piece of very interesting news that I really want you to know is this right here. Jim Cramer is urging investors to exit crypto. It's never too late to sell. What an idiotic statement. But the reason why I actually brought it up here is because Jim Cramer, historically, let me know in the comments if you know this guy, he's been the best signal for tops and bottoms, usually, at least in a short-term perspective. Whenever he would be screaming that, sell, you actually should buy, and then the opposite. This guy is literally historically a very accurate indicator, but in the opposite direction. So yeah, basically this is quite funny. Next thing is also very similar. It feeds the same kind of narrative with Jim Cramer right here, is that US consumers believe that Bitcoin will drop to new bear market lows in the aftermath of the FTX collapse. And again, as a piece of disclaimer, I think that Bitcoin is very likely to drop to new bear market lows, but, after Fed pivots and we're going to see this final capitulation event, but not in the aftermath of the FTX collapse. So I think this piece of news right here is the market being overly bearish and short. So we could see some kind of this kind of sentiment short squeeze, so to speak. And usually when the market is all looking down, it's actually usually goes up. That's not always, it's not financial advice, but this is what happens, when everybody's overly bearish. But certainly I think that we're going to actually put in lower lows for sure, just because of macro events and Fed pivoting, and depending on the likelihood and whether we're actually going to be going into an official recession. So that's why tomorrow, watch the jobless claims. Very important stuff. Now, next stuff on the list is actually quite important, and this just feeds the narrative of what's going on. Goldman Sachs is planning to invest tens of millions of dollars into crypto companies, the ones that are, starving and struggling. So this is also quite interesting. So see what US consumers believe. Oh, we're gonna go lower, sell. Jim Cramer is, screaming sell, sell, sell. When in reality, Goldman Sachs are like, yeah, boys, keep selling. We're gonna keep buying. So, it's like the smart money is actually accumulating and the dumb money is just dumping. So this is the interesting narrative that you have to actually understand and see. Now, the next thing is also gonna be mega important, which is gonna be something that before we get into the topic of central banks accumulating Bitcoin, which is just insane. Your mind, get ready for your mind to be absolutely blown, guys and girls. I'm going to take a look at a very important Glassnode article right here. And before we do, remember that we are trading on BitGet, and with my exclusive link down in the description of this video as well as in the pinned comment, you can claim up to $8,000 in initial deposit bonuses. If you deposit $2,000 right now, you'll get within 24 hours $200 bonus credited to your account. Also, if you deposit more than $500, you'll get my famous paid crypto course for absolutely free. And certainly you're getting cash back on your trading fees, which is insane. So even if you're a break-even trader, you'll still make money with BitGet, and they just released their full proof of reserves, and they are over-collateralized by 2 times. So, for example, if they have the deposited funds from other people, like $150 million, they have $300 million to back those $150 million. So they're actually over-collateralized. Therefore, they're absolutely safe to use. And if you're looking for an exchange that is transparent, unlike so many other ones, move your money from that exchange to BitGet. Just use my link down below, and you will be able to claim all of these insane bonuses. Okay, back to Glassnode. And here we are taking a look at a very important bunch of data that you really want to pay attention to. And here we're going to see this. This is something we've already looked at, but here is a slightly different narrative that this is all brand new data right now. That if we're going to be taking a look at realized profit and loss, then here finally we're actually seeing that with this last capitulation that happened just recently because of the FTX collapse, we saw a smaller amount of realized loss than the previous dump that we saw, the previous cascading liquidations and the previous capitulation event. So this means that, the leverage pretty much most of it has been flushed out. So this actually looks quite good. So right here, as the text says, let me just make it a little bit smaller. So as the text says right here, both the June 2022 sell-off and the FTX implosion prompted investor capitulation events that are of historical scale. The FTX recorded an all-time high one-day loss of $4.4 billion. However, when assessed with a weekly moving average, losses appear to be subsiding, therefore reducing. The June sell-off, by comparison, sustained over $700 million in losses each day for almost 2 weeks after the event. So therefore, we have less losses with the FTX collapse, even though the price actually moved lower and put in the new lows. So here we can observe the ratio between realized profit and loss has recorded a new all-time low, which is right here, by the way. Previous instances of extremely low realized profit and loss ratios at this scale have historically coincided with a macro market regime shift. So oftentimes when we would see this kind of an extreme in realized loss, so everything is just in a loss, then this has always been pretty much the market bottom right here, also right here. So every single time when we are seeing this, and we are seeing this right now. But guys and girls, I know that I've actually called out Glassnode previously, and this stuff, once again, as a disclaimer, this stuff is relevant to, understanding on-chain data, comparing it to previous cycles, and certainly if we adjust all of this for macro events and the potential recession, then these models are going to be broken, and we're going to definitely go lower than any of these lines, and people are going to scream, oh wow, how did this happen? So this stuff is only relevant in the short-term perspective, in my opinion, and it's only relevant if we disregard the potential for us to actually going into a recession, and this chance is still out there that all of these models are going to be broken. But if we just if we forget about it and look at it just plainly, then this is quite beautiful and is theoretically signalizing the bottom. But this is not the reason why I'm showing you all of this. I'm going to get to the point in just a second, so stick around till the end. This is very important. So the next thing that caught my attention, that in my opinion is very important, is this right here. the miner revenue and the fees momentum. So quickly, let's take a look at what it is. In sustained bear markets, the sustained bear markets are often accompanied by a significant decline in network activity, resulting in fairly lackluster fee revenue. This deadlock historically broken in reaction to a major capitulation in price action, blah, blah, blah. So in most interest is whether this uptick, because we're seeing an uptick, we're going to get to the chart in just a second, whether it's fleeting or whether it can be sustained. Because initially, we were always seeing this drawdown during bear markets, just like this area, also this year. And usually when we saw these massive upticks, this was the beginning of the bull market, or at least the end of the bear market and a complete bottom and the last capitulation. And this is what we're currently seeing right here. So make of this what you will, but this is quite bullish. But again, this is not what I want to show you. I'm just showing you the positiveness, but then I'm going to show you something that in my opinion is more important than any of this. So what we want to see here is there's just a bunch of stuff. So here is the most important part when it comes to this article right here before we move on to the central bank stuff. One area which continues to languish, meaning that which continues to disappoint basically, is the settlement of volume across the network. The current volume settled is testing cycle lows, suggesting the utilization of the network, let me move it here, suggesting the utilization of the network for value transfer remains low, despite improvements in transaction counts and unique entities. So we are seeing this right now. So network settlement levels continue to decline to range low. So this is not good. And I think it overrides everything previously. So, and we have a bunch of other stuff right here as well, like the balanced price and the delta price. In regards to our current market, this creates a range between 15,000 and 12,000. And every time, you know, the bottoms would be put in between these two lines, just like right here, and also right here, right in between these two lines. And we are basically hovering. So potentially what this means that we could bottom out just, you know, by these pricing models, which again, in the case of recession and unprecedented macro environment would become, to be honest, quite irrelevant. But our worst case scenario theoretically for, you know, this kind of on-chain analysis would put in the Bitcoin worst case scenario Bitcoin price between $12,000 and $15,500. But last but not least, the conclusion here is that let's read it together. In conclusion, it is evident that the level of realized financial pain across Bitcoin market participants throughout the last 6 months has been nothing short of staggering, which is true. However, the severity of losses do appear to be diminishing over the recent weeks, which is quite good, right? And we can also note a positive shift in character for both network activity and the demand for block space. This shift in structure is not, however, supported by rising transfer volumes. And this is most important, which continue to languish at cycle lows and suggest an elevated level of retail-sized participation. So we're not saying big money really moving in that very much. So transfer volumes is very important because we need volume. We need power to continue this momentum and see, you know, all-time highs in Bitcoin. That's why it says right here, there is an associated uptick in on-chain activity. However, it lacks substantial volume follow-through. So we are not seeing any power in the market right now. And this is most important. This is problem number one. And problem number two, which could be the reason for the lack of substantial volume follow through, is the reason because everybody's primarily pricing in or, you know, worried about the risk of recession and a huge dump following a too late Fed pivot, which is very, very possible. So make of this what you will, but I'm putting it in context as of right now with all the brand new data. And now, last but not least, and the juiciest thing you've all been waiting for, and this stuff is really crazy, guys and girls. And guys, this video is really long, I know, but I made it super juicy for you. So like the video, share it, comment down below, show me some support, and of course, subscribe and hit that notification bell. So this article is called, this is not even an article, it's a huge paper, it's a research paper, which was made by Matthew Ferranti. It's called Hedging Sanctions Risk and the Cryptocurrency in Central Bank Reserves. And number one, I'm pretty sure that some of the central banks are already accumulating Bitcoin, in my opinion. They just not disclosing it because they don't want extra scrutiny or, you know, public eyeing them or, you know, hatred, whatever. But let's just take a look at this. And this paper right here outlines the potential for central bank crypto accumulation and specifically Bitcoin in situations when they're going to be forced to hedge, you know, against sanctions. And this is a very long paper. You can actually find it online. It's like 60 pages long, but most important pages are this right here. So this is a model which outlines a possibility of the amount of Bitcoin held by central banks. So in the countries without sanctions, they're projecting that we could see a Bitcoin holding in the central bank's holding basically anywhere from 2 to 3%. Now, when it comes to the countries with sanctions, and why this is so important, because everybody's sanctioning everybody. Just look at what's happening in the world right now. And you can sanction the government in so many ways, except for 2 ways, which is gold, physical holding of gold, and Bitcoin. So that's why the countries might start actually going to Bitcoin and to protect themselves against sanctions. So certain countries which are prone to sanctions could increase their Bitcoin holding in their central bank up to 5%. And then if we're going to be taking a look at some, more extreme cases like, huge sanctions, maybe some, bigger countries with bigger political problems, etc., they could be increasing their Bitcoin holding in their central banks anywhere up to 40%. So if you just imagine this, because this is something, once again, when there are huge sanctions in the world, this is something that, another country cannot take from another country. It's physical gold and also Bitcoin. And this narrative is already circling around. And I'm pretty sure that some governments are already slowly getting into it. And it's also important to understand that so many smaller countries, especially when we're seeing the dollar being so freaking strong, it's affecting economies around the world, because it's, currently the dollar is the strongest currency out there that is used for global trade, etc. That's why we want to see the de-dollarizing. And this is what this whole article, again, I'm just taking, a few main points from this article. If you want to read the whole thing, go find it online and read it. And this is something that we cannot deny that the governments are going to be going to in the near future, simply because of what is happening. The dollar has to lose its power, and the governments and the countries should become more independent. And as in accordance to this article and this whole study, Bitcoin is actually the answer. And all the statistics and all the numbers right here with all the explanations and all the narratives makes perfect sense. So this is crazy, guys. What do you think down in the let me know what you think down in the comments, because if we're gonna see governments actually buying into Bitcoin and actually holding it in their reserves in the central bank, this is the point when Bitcoin can go to something like $500,000, $1 million, etc., especially surpassing gold, the physical gold, for the reasons of more profound scarcity and a bunch of other reasons. But let's leave this topic for another video. So now we're getting into the Bitcoin chart, and as of right now we're seeing huge weakness. That's why the long trade that I had over in BitGet, remember about all the bonuses over in BitGet, if you want to be trading actively and we want to get all the insane bonuses, these bonuses, then go down into the description of this video and claim all of those bonuses. These bonuses are special for my YouTube community. So right now we saw, this is what I was worried about, this is what I told you in the previous video. We had this, number one, this breakout, and our target for this breakout was about $18,000. But to be honest, we were starting to lose momentum and power already in this vicinity. This is what I told you in the previous one of my previous videos. Then we saw this breakout. I still held my long trade here, but then look, it just came back, volume just dropped off. We made another attempt to go higher, but now we just dropped lower, and it got supported by this support, obviously right here. So technical analysis, people say technical analysis doesn't work. Well, because they didn't learn from Thomas Krallo. So if you want to learn how to trade properly, professionally, and different markets, and do different types of analysis and do all of it yourself, then go down into the description of this video and find a link to a special offer on my trading education, or you can go directly to thomaskrallo.com and become one of my proud students today and just change your life for good, because my education is the best in the world and it actually produces professional traders. So welcome to join. I told you in one of my previous videos that if we're going to be breaking below here, below this support, this yellow support as well as this blue support, I'll just leave. So my stop loss was pretty much at 16,900. So in this move down, I exited. My entry price was right here in this vicinity. So I exited with a micro profit, which is still a profit. I mean, it's still better than most hedge funds out there who are actually losing money of their investors this year because they're just stupid. So that's why I left it. I'm not in a trade as of yet, but certainly all of the trades that I'm going to be finding and taking, we're going to be posting in our Discord channel. So join it for free, and link down in the description of this video. As for right now, if we're going to be seeing any kind of potential downside continuation, we really want to see us break this blue support. And if it's going to happen, then our next target could be put in at something like $16,000 right here as part of this just weak side move. And that's pretty much it at this point. But as for longing, I will stay away from longing it right now, because just the momentum is gone. It's just not there. It's just slow, weak, and nasty, unless the catalyst comes out, which again I mentioned in the beginning of this video, which is this right here, which is going to be released tomorrow at 8:30 a.m. Eastern time. That's all I got for you today, guys and girls. Check out this tutorial on how to trade Bitcoin properly or any other altcoin with proper risk and money management so you stop losing money. A cool tutorial, very quick one. Check it out. You're going to learn a lot. And as always, peace and love. Thomas Krallo. Stay smart, stay rich, and I'll see you in the next video. Bye-bye.